So good evening, Strategic Alpha community members. Good evening, Conviction Club members. Uh, this is 7th of November and we are up for yet another weekly community connect session. So topic for today's discussion is Kya Lagta Hai market. So without wasting much time, let us move forward and understand. So what are we going to discuss in this today's session? So at first, we'll be discussing about the weekly roundup. Then we'll be discussing about what's up with Nifty. Is the pain in the markets already done? Then I'll be discussing about the learning bytes, factor rotation concept. And I'll also discuss about the factors. Uh, what are the pockets factors which pockets of the markets based on factor rotation which shall outperform going forward. So factor rotation I'll be explaining. Then I'll be talking about COPX. What is the update on the COPX? Nifty Capital Markets Theme. What is the update on that? PSU Bank Theme. What is the update on that? Metal sector update. Then dollar index and what it means for market. Can Indian markets outperform US markets going forward? And Bitcoin update. So these are all the things which we are going to discuss in this today's session. So let us move forward. So this is Strategic Alpha's weekly roundup, 7th November 2025. Uh, so let us first discuss about the frontline indices, weekly performance. India VIX settled at 12.56, up 3.4%. Nifty 50 was down 0.10%. Nifty Midcap 100 was up 0.03%. Nifty Small Cap 250 index was down 1.43%. Nifty Public Sector Enterprise was down 1.9%. BSE IPO index was down 2.65%. On a sectoral indices front, if we look, the Nifty Capital Market Index was up 3.4% in past 1 week. So capital markets theme has done much better than the markets. So Nifty Mid and Small Financial Services Index was up 2.1%. Nifty PSU Bank Index was up 2.1%. Nifty Oil and Gas Index was so the data we don't have that data. So commodities performance, silicon was up 6%, natural gas was up 5.5%, heating oil was up 4.96%, and there were other commodities. So in industrial commodities, tellurium was up 4.5%. So these are critical minerals. Actually, we also track those. So it was up 2.1% and other commodities. So we track around 70 plus commodities every week on a weekly basis. Because what we think is if you have to understand equity, you have to understand commodity. Why? Because for all the equity businesses, around 80% of the businesses, some or the other thing will be a raw material, which will be commodity. So if you understand the commodity cycle, indirectly you can understand the equity cycle. And that is the reason why we track 70 plus commodities, which helps us to understand more about the equity cycle. So equities and commodities are related to each other. It is not that equity market is different and commodity market is different. So if you understand commodity cycle, you understand equity cycle for 80% of the listed universe, because only 20% of the listed universe, there will be tech companies where there is no raw material from commodities. Otherwise, even chemicals, specialty chemicals, metals, most of the thing, most of the places, even for that matter, there are some poultry manufacturers. The commodity is maize. For example, Venkateshwara hatcheries, Venki's, the biggest raw material for Venki's is maize, and maize is a commodity. So if you understand the commodity cycle, you can understand equity cycle as well. So that is the reason why we track 70 plus commodities. Now let us move forward with news which matters the most. So a US Supreme Court decision against Trump tariff will threaten 10% of India's exports. SEBI to open revising cap on brokerage fees paid by mutual funds. And India may cancel green power projects struggling to find clients. So, so this was about the news which matters. Now, let us discuss more further on Strategic Alpha's FTVT framework. PSU Bank, selective PSU banks can do very well from here, even from here. Capital market sector can do well. Nifty metals, now here onward, we have to be very selective. And the factor is value. So why I'm saying the factor as value, we'll be discussing at a later stage. So I think let us look at the Nifty 50 now. And I discussed that on satellite channel as well in the today morning itself that markets can bottom out today. So that is the message which I posted on satellite channel. Uh, and the market bottomed out has happened. So pain in the markets is done. In the last weekly roundup, last weekly session, even before that, last to last weekly session, we had said that markets, we have seen a double doji at the top. We might see market falling down and there might be some knee-jerk reaction also. That is what we said, and exactly it has played out that way. And we have seen some weakness. And as I said, that this is a pause to our 4 month bullish thesis, not a stop. Because as today, if the markets would have closed below 25,200, then it would have been a risk for our thesis of 4 months of bullishness. So it is a pause, not a stop. And we have seen that the markets have now got bottomed out. At least Nifty, it is clearly showing the signs of bottoming out. Short-term bottoming out has happened. So we might see that going forward, once again, the markets will might find the strength, and the strong stocks and strong sectors have already started outperforming the markets. Today, Bombay Stock Exchange was up 10%. In the morning itself, we had discussed about capital market theme in satellite channel, and BSE was up 10%. Angel one was up 5 to 6%. So selective stocks have already started doing well uh, from capital market segment. So unless and until Indian markets give a breakout, it will be a selective rally, and the selective rally will be happening in capital market selective, PSU bank selective going forward. Because earlier, blindly, if you had owned any PSU bank, you would have made money. But going forward, it will be very selective again in PSU banks. Then metals again selective, because the this is a selective bull run right now which is happening. But once the index also makes a new lifetime high, the broad-based rally might also start. But the bull run in selective bull run has already started, and it is already doing well. Now let us look at the learning bytes factor rotation. So what do we mean by factor rotation? You might have heard about sector rotation, but we also follow at Strategic Alpha, we don't not only follow sector rotation, but we also follow factor rotation, country rotation, and thematic rotation. So these are all these different types of rotation where the money keeps on flowing, money keeps on shifting. So factor rotation is the continuous shifting of market leadership between the different types of investment styles like value, growth, momentum, quality, and small cap. So as macro conditions or liquidity or risk appetite changes, different factors outperform at different times. So smart money doesn't doesn't stay loyal to only one style. It reallocates ahead of these shifts to capture emerging leaders. So retail investors usually lag because they hold yesterday's winners, while institutions always have an added advantage, which they can spot this factor rotation happening. So understanding factor rotation helps an investor to stay aligned with where the capital is flowing and not where it used to be. And most of the retail investor just follow where the money was made in past, but that way they cannot outperform. If you have to outperform, you need to understand the factor rotation, where the money can flow in future. and that is what we are going to discuss in this today's session. So what are the major factors in the factor investing? So most investable common factors are value. Then there is one more factor, which is growth. Then there is quality. Then there is momentum. There is low volatility, and there is size. Size is also a factor. So value means cheap valuations versus earnings or assets. What it bets. Value factor tells it about cheap valuations versus the earnings or versus the assets. So either it might be P/E ratio, or either it might be market cap to sales, or either it might be price to book. So that is what value factor captures. And this is one of my favorite factors. Whenever the factor value favors, I'm heaviest confident, because that is my natural style. Now, then there is growth factor. The growth factor is high earnings expansion. If the companies are growing at above 15% plus CAGR, the such companies fall into this growth factor. Then there is quality. So quality is a factor where there is a balance sheet strength, and there is a high return on equity and high return on capital employed. So if the company has high return, consistent high ROE and ROCE above 15%, higher the better. And the list is sorted out in a way that the highest of the consistent ROE, ROCE comes and becomes a part of this list. So quality, high ROC, high ROE and ROCE, and balance sheet strength is the factor which comes under quality. Then there is momentum. So momentum is a factor where there is a price strength plus trend persistence. If the price is moving up, so the momentum, whenever the momentum factor gets active, the momentum factor tells you that irrespective of which category the stock might be, there is a price strength which is happening, there is a buying which is happening, and there is a trend persistent, and there is relative outperformance compared to markets. And that is what tells you about the momentum. And then there is one more factor, which is low volatility. The stocks with low volatility, stable, defensive, or low beta stocks become a part of low volatility. Then there is size, which is also a factor, which is small caps or large caps. So small cap premium versus large cap premium, that becomes a factor of this size factor. So based on this factor, money keeps on flowing within the market, and along with sector rotation. If you are understanding the factor rotation, it becomes a added advantage, because that is what gives you the confidence and conviction to understand where money is flowing. It is not just that you spot a stock where it is undervalued. It might take years for that stock to unlock the value. But if you know where the money is flowing, and if it matches your investment criteria or any stock, long-term stock into that, then it becomes an added advantage, because you must also check where the liquidity is flowing. Because unless and until you understand the liquidity, you'll not be able to make alpha over the markets. And that is what factor tells you where the money is flowing. Apart from sector, factor is also an important point. So now let us look at the factor. So Nifty 500 value 50. I've discussed this earlier also, even before this, few sessions back, that Nifty 500 value 50, value as a factor has started outperforming Nifty. And this is, we discussed this few weeks back, maybe say 7 8 weeks back, in the weekly community connect, that value as a factor has started outperforming. So here, if you can see, this is Nifty 50 500 value 50 divided by Nifty ratio chart, which means if the ratio is moving up, which means that Nifty 500 value 50 is outperforming the Nifty. And it outperformed, again it fell down. Once again it outperformed. Now it is creating higher top, higher top, higher top, and higher bottom, which means the Nifty 500 value 50 has started outperforming Nifty 50. So the money, smart money, is flowing in value 50 index or value 50 value theme. So that is what you need to understand. Now, I had also mentioned about it in September 2024 or October 2024 that momentum strategies will take a seat back. And it has exactly happened that way because our factor rotation signals has given us the suggestion that stay away from the momentum strategies. And momentum has lost a lot of alpha in this past 1 year of market. And even today, it is struggling. So momentum, don't chase momentum strategies at this point of time. It might not make you money because it is still at the backstage and it is underperforming Nifty. Now let us go forward with one more factor and let us just check. This is Nifty 200 quality 30 versus Nifty 500, and which means that this is a bunch of quality stocks, and the quality stocks are heavily underperforming Nifty since 2020. And I said this in COVID session only, when I took a session during COVID time, saying that money will not be made in quality. People holding Asian Paints of the world, HDFCs of the world, you'll not make money over the next 5 years. That is what I said. And I said it because quality as a factor was at a step back, because quality as a factor was not the most favored factor. So if you are still owning the quality stocks now, what is meant by quality? A quality stock is defined as the consistent return on capital employed and return on capital ROC and ROE for past 5 to 7 years. 5 7 means for long term, consistent return on capital employed, return on capital ROE, ROC. Such stocks are called high quality stocks, and high quality stocks or quality stocks as a factor will not, it is highly unlikely that it might not make money. So that is about quality. Now let us go forward and understand COPX. So COPX gap filling has almost done. So this is the gap where the copper miners had, there was a gap, and that gap filling is done. Hopefully the uptrend should start once again here. Now let us look at capital market theme. So capital market theme, after a breakout, there was a breakout retest. And I think the worst is again, short-term worst period is done, and it might start its upward journey once again. Now let us look at PSU banks. PSU bank is already doing good and it can continue to do good. Now let us look at Bitcoin. So Bitcoin is at a place where the maximum pain in the past has been 30% from the top. So right now it has completed 20% of the fall from the top. And we have seen that after this 30-week moving average, Bitcoin also has fallen up to 10%. So that is what we need to look at the Bitcoin. The fall has been 20%, and in the past the normal fall has been 30%. So that is what you need to keep in your mind. Now one more thing is, for emerging markets, for Bitcoin, for metals, for PSU bank, or whatever the themes which we have discussed, what is that trigger which is giving me one more confidence and conviction is dollar index. Even for commodity bull run, this is important. Dollar index has just got rejected. There was a evening star pattern, and this is 200-day exponential moving average line, and the dollar index has fallen below this 200-day exponential moving average line. And because of this only, Indian market struggled for past 8 days, because DXY was moving up, and during when the DXY moves up, usually the emerging markets struggle. So past, see, 1 2 3 4 5 6, so for 4 5 days Indian markets were struggling because dollar index was this is one of the reason. it gives you the indication. Now the dollar index has given a reversal, which means Indian markets, not only Indian market, emerging markets, commodities can do well. Even commodity stocks can do well. So this is a positive sign, and this is what it means for the markets. And the overall commodity bull run thesis is still intact, because if this would have been a big breakout, then there would have been some turbulence in the commodity bull run, overall what we are seeing. So dollar index de-dollarization keeps on continuing. Now, at this point of time, connect the dots with the dollar index with this ratio chart. This is S&P 500, CNX 500, Indian markets in dollar terms divided by S&P 500. And we have discussed this in earlier sessions also, that whenever this ratio hits this line, Indian markets have outperformed the US markets. If the ratio moves up, which means Indian markets outperformed US markets, and that happened earlier also. And once again, we are at a critical juncture. So, is it telling us that Indian markets can outperform US markets? And this is a time where the whole world is chasing US stocks, but the money will be made in Indian stocks. So, money can be made in Indian stock, and this is the chartical evidence of what has happened in past, be it 2013, be it COVID, or be it maybe today. So Indian markets can really outperform US markets from here on. And we already have a thesis that US US is 25% of global GDP, but 78% of global market cap, which is unsustainable. So from that point of view, also India is placed much better than US at this point of time. That is what I think. One more thing is Bitcoin versus gold. I have already said it earlier that go slow on Bitcoin. I've been saying this because only when the Bitcoin to gold ratio touch crosses this 38 zone, that is the time when it will start outperforming gold, not now. So we are in this turbulent times. Start allocating. I've started allocating, but I'm going slow. So as of now, I'm going slow. And whenever this breakout happens, that is the sign where we'll get a clear sign that it is now outperforming gold, and my confidence and conviction can increase. So I'm going slow on Bitcoin. So one more update is regarding, we in the last weekly roundup also I had shared. Once again, let me just share. We are hiring fundamental research analysts for bottoms up research, and also top down sector specific research analysts. The location will be Lower Parel, Mumbai. The role will be full time. So if you have zeal for learning and wish to associate with us for long term, do send your CV or resume at suyog.dhawan@strategicalpha.in. Do mention in the email what is your USP and why we should shortlist you. Please pay attention here. Your USP and why we should shortlist you. So soon we'll be scheduling the interviews. So this was about the the update on hiring. So thank you everyone for joining in. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, uh, YouTube, Instagram, Twitter. I do take all the sessions on Friday session, but I post all the updates live on Twitter handle. So do follow my Twitter handle. Apart from that, most of you, I have seen that you are not a part of VIP access still. So if you are not been a part of VIP access, just search this VIP access, Strategic Alpha VIP access. This is how the channel looks like, and you can be a part of that Strategic Alpha VIP access. So one more update is about techno value investing workshop. I do take regular techno value investing workshop where I teach about our proprietary FTVT framework. So soon I'll be starting the workshops again. Do register for that workshop because it is a blending of fundamentals, technicals, value, and trigger. Fundamentals tells you what to buy, what not to buy. Technicals will tell you when to buy, when to increase, when to reduce, when to exit. Value will tell you how much to buy, and triggers will help you prioritize between the bets. So this is our proprietary FTVT technique, which we teach in our workshop. Do register whenever it happens. Soon I'll be announcing about it. So be prepared for it. So also do share this YouTube video to whom you think might be beneficial, and help this community grow. So thank you everyone for attending this session. I'm just concluding that I've just completed this today's session. Uh, Also, because of lack of time, I won't be able to take today any questions today. So thank you everyone for joining in.